FDIs. Now, the gross foreign direct investment into India has declined 16.3% year on year in financial year 23. This is according to RBI's latest monthly bulletin that is coming in. It was at $84.8 billion in financial year 22, came in at $71 billion this year. Now, net FDI declined to $28 billion in 22-23 as compared to $38.6 billion a year ago. So, net, there has been a decline in FDI by as much as 16.3%. And I want to bring you in, Subhomoy, because this is in regards to what we were just discussing, that while centre is not going to oppose FDIs coming into states and very lucrative, deals that are signed every time we see a state coming up with a mega investment campaign of sorts. But many of these investment promises never see the light of the day.
Quite true. And that's exactly where the problem comes along. Of course, to put the numbers in perspective, then the slowdown is basically a follow-through of the 2 years of the global weaknesses that happened. So in 2020, the numbers that were high was basically reflecting the buoyant investment climate up till 2019, which showed up in the figures for 2020. Also a large deal that happened for Reliance. In subsequent years, in 2022, as you are seeing the numbers now, this number has gone down because the essential flow of investment across the world has definitely slowed up. So India is one of the largest, but definitely it has also taken in the shock of the weakness that's happening. As you find the world economy growing after 2024, after 2023, then you would find these numbers again rising up. So as long as the global recession stays on, for instance, there's the uncertainty created this year tripled by the Russia-Ukraine war, by the supply shock impact of China, and now the debt crisis that's happening in USA. All of these will lead to very skittishness of foreign investments being committed to what is called the emerging markets. Okay. So if there's an emerging market to be invested in, yes, it will certainly be, as you were discussing, it definitely will be, one of the strongest contender will be India, but whether the money at all will be put in will depend on factors which are beyond India's horizon. So that's about the overall numbers. But I fully take on board, and that's what we are discussing, that creating problems at the state level is something that we have to really sort through. And in fact, these numbers, one of the major impact of these numbers is it sort of focuses our mind. It tells the policy planners that, look, the world is in a difficult state. Growth isn't happening naturally. India is in a good sweet spot because of the reforms that have been happening. It's not like something that is India's Dharohar, that India will get it because India is India. Because India has been doing all the right things, so therefore the money had been coming. But if we decide to blow it up by, putting in obstacles, by not clearing clearances fast, then obviously that money will also become extremely nervous. Emerging markets like Vietnam, emerging markets like Indonesia are also competing for the money. And if they can present a better case, then obviously the money will flow there. So therefore, it's very necessary. I take on board the caution that has been expressed in the Moody's report, and so on in lots of other reports that keep on coming out, that the clearances need to be faster. Okay. However, having said that, if you could permit me 1 minute more, clearances in India are not that easy to do because of lots of factors that come. And that's something that we can discuss sometime later, either now or whenever you are.
All right. Yuvika, do you agree with that assessment? Clearances need to be faster. That, of course, is one of the reasons. What many are also calling high inflation, weak demand in US, Europe for low FDI inflows into India. Another reason. What would you attribute this trend to? Because remember, India bucked the trend even in 2020 when, all over economies were not doing really well. We still saw a subsequent and a significant inflow of FDI. But at this point in time, when we are well over, the COVID peak, what would you attribute this trend to? Yuvika?
Sorry, Shweta, I missed the last 10 seconds of your commentary.
Yes, I was hoping you could perhaps enumerate on what would you attribute this trend to, because we've bucked the trend at the peak of COVID, we've bucked the trend in 2022. What Subhomoy said, that clearances need to be faster. Many are saying it's because of, you know, low and high inflation and low demand in US and Europe that is driving low FDI inflows in India.
Absolutely, Shweta. So I think last year was a very difficult year globally. And just to re-jog our memory, we started with the overhang of COVID. Soon thereafter, it was the Ukraine-Russia crisis, commodity prices shot through the roof. And thereafter, we realized that inflation that global key central banks had expected to be transient was not so transient, which saw aggressive rate tightening and thereafter the tightening of financial conditions which followed. And by the end of the year, by the time we closed the year, we were talking about a likely recession that was to hit the global economy. So in against such a global hostile environment, not only did global flows shrink, but obviously India's share also somewhere dipped. And that's how you should rationalize this number of net inflows of FDIs going as low as 28.6 billion, which is somewhat akin to the numbers that we saw in 2012, 2013. And mind you, again, that was a period when there was heightened global uncertainty because of the taper tantrums that we saw in that particular year. So somewhere when the global environment turns that hostile, it is bound to have an impact on India and the flows that India attracts, not just on the direct investment side, but even equity for that matter, or even from the venture capitalists, as far as we saw flows towards startup funding last year. All of these different aspects did see a shrink. However, I would like to draw your attention towards a policy uncertainty index that we work closely with. Now, this is a policy, a global index that has been constructed by three scholars by the name of Baker, Bloom, and Davis, associated with institutions very well reputed, such as Kellogg, Stanford, and Chicago, all three of them from three different institutes. And what they essentially do when they build this indicator, that is the index, they cull through different sentiment-based words from newspaper articles. So it's a crowdsourced method of constructing the index. And what we find is that there is a very high degree of correlation between this economic policy uncertainty index and the GDP growth. So there's almost a correlation of 70% at the global level. What this essentially means that if uncertainty at the global level is rising, your GDP is likely to fall down, and along with it, there will be monetary tightening or liquidity tightening, which is likely to have an impact on your flows. Now, coming to India, and that's where the interesting part comes in, we plotted the index, which is the Global Uncertainty Index for the world as well as India. And when we juxtapose these two series together, we find that India has managed to decouple itself fairly well from the global uncertainty and the rise in global uncertainty on a trend basis that we have seen over the last 7 to 8 years. And we have to keep in mind, it's not just last 2 years of COVID, but even when you go back, jog your memories before COVID, global uncertainty had risen because there was a lot of trade-related mayhem, protectionist policies coming in. So global uncertainty as such has been on an uptrend, at least up from 2015, 2016 onwards. That is well before the onset of COVID. And what India has managed to do is that it has been able to decouple itself from this uncertainty at the policy level. And to us, that becomes very important because that somewhere justifies the kind of flows that we've received on net basis on the FDI front. So from somewhere around on an average run rate of about $20 to $25 billion, say between 2012 and 2016, India did manage to take this number close to $40 billion. In fact, we peaked at $44 billion in FY21. So we have benefited from the policy certainty environment that India has been able to offer. Having said so, yes, when global certainty tends to peak, and in times such as now where we are seeing a lot of financial market uncertainty also coupled with policy uncertainty, the impact will be felt on India. And we saw that in FY22 numbers and probably getting prolonged somewhat in FY23.
Yuvika, sorry to cut you short. I just want to quickly understand. So apart from economic certainty, policy certainty, and you mentioned something very interesting here by the way of that map, I want to understand what active measures did the government take to decouple itself from global uncertainty?
Right. So I think we have to see it in the context of the last 7 to 8 years. And it's not just the government. Even from RBI, we have seen a lot of push. Like I said, we have seen RBI adopt an inflation targeting regime, which has brought in a lot of certainty as far as inflation is concerned, credibility to the monetary policy. If we talk about the government, there is predictability as far as government policy is concerned. We have seen strong policy impetus in the form of tax reforms, GST, reduction in corporate taxes. I could name stuff like PLI policy getting a very strong push, and this is across a gamut of sectors, 13 sunrise sectors that have been identified. A policy push has been created for them to attract global investors. Even during the pandemic, we strongly believe that we did not let go on our fiscal profligacy. So we were somewhere conscious, and we did not exhaust our entire fiscal power. So whereas a lot of developed countries did go all out and exhaust their fiscal ammunition, India was somewhere curtailed. We did provide support, but we did not go overboard. We kept it as a policy tool that could be deployed later, and we have seen the fiscal deficit now on its correction path. And in addition to this, we have seen reforms across the spectrum. So, like I said, inflation, there's a lot of rule based methodology. Ease of doing business is something that has also been adapted with very closely. Reduction in reforms, for example, forms that need to be filled in for exports and imports. So, there's a lot of regulatory related improvement in the way in which India is doing business now. And one thing I would want to also add, that from a macro perspective, despite the global economy and India included seeing a sharp decline in growth in the COVID years, but even then thereafter, if we were to look at India's growth from a 3-year time span or on a trend basis, we do find that India was probably, even during the COVID years, one of the least impacted economies, or at least the wherewithal of the Indian economy was much higher than other developed or developing economies. And within this, one strong support pillar that supported growth and the recovery in growth was the durability to growth that the government's capex cycle offered. And we have seen a very strong capex push of the fiscal policy in the last 2 to 3 years. And this was rightly brought in at a time when the private sector was somewhat limping and grappling with COVID-related structural changes in the economy. But the government took the baton to provide that durability to growth and provide that strong cushion to growth. And we are seeing the recovery that we are seeing given its support.
Okay. Let me go to Subhomoy before we end this bulletin. Subhomoy, what do you make of this trend? Are we to read too much into it? Do you think we are going to be on the path of higher FDI inflows very, very soon? 16% decline is significant, but I don't see that affecting, larger investment sentiments.
Yeah, you're absolutely right, because if you look at the decline, you also have to compare it to the fact that what has been the decline in other comparable geographies.
Right.
So then you realize that actually it's nothing out of the blue, that money is going to the rest of the places, whereas it's not coming into India. The criticism that many agencies like Moody's are making about the fact that Indian decisions on critical economic issues often tend to be slow is therefore a valid point, and goes irrespective of whether the annual FDI flows are there. And that's something that is a larger challenge, which we have to handle. As you would have noticed, as I said, that most of the states, it is there where the most of the attention should be paid. Central government is not the place where FDI attractiveness and others will be decided. When investors from abroad, when they come, they talk with the state governments, and how the state governments react, how well they follow through on policies, is what will impact. For instance, let's look at Karnataka. Now, Karnataka, again, there's been change in the government. But as long as Karnataka will ensure that the policies for attracting investment continues, then that's fine. That is exactly what the investors want to understand. So these are very critical elements of the reform package. Bureaucracy takes up its cue from the what the political establishment is saying. And the political establishment tends to look for longer term movement, basically being stable over what they say on investment. then that's good. That is what will aid reforms in decision making. Bureaucracy is just, as to know, is bureaucracy is like a reflected light. It
Right.
reflects what the political structure has to say. So the political structure has to be consistent in their decision-making process, wherever, in whichever states that's been happening. It's not surprised that in those states, investors come in huge numbers, whereas the shun states where despite big promises, things tend to change very fast. Yeah.
Okay. So is it your assessment then that things will change very fast here?
No, I wouldn't. I mean, as I said, in the southern Indian states, in the western Indian states, there is a very welcome tendency to take a long-term view on what is to be done. Of course, there are wrinkles. As I said, the bullet train project got into trouble. The Ratnagiri refinery has been having trouble, but more or less it tends to be stable in those states. The more we encourage those sort of steps, the more we also allow factor reforms, which is labor and of land, to happen, investments will keep on moving. Again, as I said, that those are some things which the political structure has to take a call on. The bureaucracy can do very little in those circumstances at the state level. Yeah.
All right, Subhomoy. So there has to be more political will in order to drive business sentiment. That is the message coming in there. Subhomoy Bhattacharjee, Yuvika Singhal, thanks very much for joining with your inputs on that story.